Okay, we are recording now. Disclaimer before you say something that shouldn't have. Just like, for all the viewers, we are recording right now. Really. Okay.
Oh, man.
Welcome back, ladies and gentlemen. On today's real estate show, I got Amanda Melendez here, and we're going to discuss everything about FHA loans because you guys have been asking me a lot of questions about FHA loans. And I'm a real estate agent. I am not a lender, so I got the brains with me. Give a little introduction, Amanda, and what you're going to bring to the table.
Yes, sir. So thank you for that. And he's right. I have the brains. He has the brunt. I have the brains. So no, I'm just kidding. But yeah, I have worked a lot with Victor. He is awesome at what he does. I'm in the lending side of it. So he's your house guy. I'm your numbers girl, and come with a lot of knowledge in a lot of areas. So that's what kind of makes us both lethal, is that we've been through a lot, not only, personally and all of that in life, but in business as well. So we know how to be able to answer the right questions and put you into the right home and right loan. So it's what I love to do.
Awesome. Thank you, Amanda. So I have a lot of questions about FHA, and I get them a lot. And I think me and you went back, when we've gone back and forth, like, hey, just send them to me. And I'm just like, girl, these people are texting me like at 8:30, 9 o'clock at night.
So we do what we can for our clients, right? Yeah.
So what I figured for my viewers is, hey, if you have an FHA question, I'm going to just send you the link to this video. You can watch it, and we'll just outline it.
Yes, there you go.
It'll be a lot easier than answering questions at 9 o'clock at night. Not that we don't like it. It's just, we do have, I have a 7-year-old, I have a 2-year-old, and Amanda has a basketball court team over there on her side.
Yeah. literally. Yeah.
Including the husband. I'm just like,
oh my gosh. Yeah.
Okay, let's get started. Enough with the joking around. You know how we keep it real on this YouTube channel. So I have the first question, and I am looking at all my screens like I always do in my videos, but please just focus on the beautiful lady at the very top or on the screen. So the first question I do have, Amanda, is what is a FHA loan, and who are these loans usually designed for?
Good question. I like that last part, designed for. So FHA is a government-backed loan. So what that means is that it has different guidelines than, let's just say, a conventional loan, because whenever the government's involved, whether you love them or you hate them, it is something that they control whenever you're getting that type of loan. So it's typically known for, it's not a first-time homebuyer loan. That's a question I get a lot, is that FHA is only for first-time homebuyers, and that definitely is not the case. FHA is a lot more lenient, which makes it desirable for first-time homebuyers. So that's typically designed for, let's just say you have a lot of debt, right? Let's just say maybe you have not a lot of money to be able to put down. Those types of things make a FHA loan desirable. They have a lower down payment typically, and it's also a lot easier to qualify for an FHA loan versus a conventional loan. So that's pretty much who it's designed for. I do have people that buy that buy homes that it's not their first home, but they just like the FHA loan and they like the rates and they're okay with it. One of the other things that the FHA loan has is the mortgage insurance. It is on the loan for the life of it. So it's not like conventional or any other product. So that is one thing that is always going to be in your payment, but it definitely is a good loan, especially if you have more debt than you would like to have.
Okay, perfect. Now you jumped to the question. You're already gonna answer this. We're gonna talk about the mortgage insurance. So
okay.
I know that so let's just talk about it right now. Do we have 2 mortgage insurances on the loan or just one? Because you have MIP and then you have annual. Can you kind of describe what's the difference, what's the percentage, and how much it is, or just kind of give us a scenario on that?
Ooh, numbers. You're throwing numbers at me. Okay.
All right. Check it out. I got an example. Okay. So I have a annual mortgage insurance premium at $350,000 house.
Oh my gosh.
Is it 0.85%? Is that right? Is that about the right percentage?
It's about the right percentage. Yeah.
Okay. So it comes out to $2,975, which is $247.92 a month. And the mortgage, this is the annual mortgage insurance premium.
Yep.
Okay. So is that for the life of the loan?
So now you're getting super technical. So yes and no. So whenever you purchase a home, you're going to see a charge on there for upfront mortgage insurance, right? You're going to see that on there. That technically is something that is going to be inside of your loan. You quote unquote pay it, right? Or you pay for it. When you go to refinance, that's when you would typically see that money because you almost get a refund of whatever's left over in that. So to answer your question, it is on the loan for the life of it, no matter what. So a lot of people get confused with, well, if I have 20% equity in there, then it just drops off. And that's not the case with FHA. Conventional, yes, that's another video. But FHA, definitely not the case. You can have it for, literally 20 years and it never drops off. Now, doesn't mean you can't refinance into conventional, but for that particular loan, it does not. But your calculation is correct. A lot of people ask me, where does that money go? That is not for me to answer. I am not the government. I have no idea. To be quite honest, it's not my thing. But they charge it. That's the only way to get an FHA loan, and you have to be okay with that in your payment. So,
gotcha.
Good question.
Cool. And then the other question is upfront mortgage insurance premium, is that separate to the mortgage insurance?
So like a separate fee?
Yeah.
So this is, again, you're getting technical on me, but you'll see it on your closing disclosure form as a fee. Let's just say it's like $5,000. You're going to see it as an upfront mortgage fee. Now, when you see that, that doesn't mean you owe $5,000 additional at closing. That just means that's how much your upfront mortgage costs will be. Now, when I talked about it being refunded, right, when you refinance or whatever the balance is being, cut to your next loan, that's what it's there for. So you're paying that money back, but remember, with everything, right, interest is included inside of your payment, all of that. Principal is included. So when you think you're paying, like, let's just say $1,500 for a mortgage payment, there's a breakdown of where all that money goes, right? So you can't just think you're paying $1,500 to principal. That's not the case. Same thing with mortgage insurance, right? You have that monthly fee. That's great. But obviously, if your upfront mortgage insurance is $5,000, it's not like you're going to stop paying at year 5 because you broke even. Does that make sense? It means that you're still paying on the life of the loan over the premium that was charged in the beginning.
Gotcha. And of course, if you have any other questions, you can reach out to her. I'll put all our information below, and we can start your house hunt and start you with your home loan as well. I know it's a little confusing, but we will definitely break it down in black and white.
Yes. And it's good that you're asking these questions because we always get them, right? Like, you and I have closed, a lot of deals together in the sense of FHA buyers. And we get these questions of what's this, what's that. So sometimes to be able to listen to it before you actually buy a home, you're going to remember it once Vic puts you under contract, right? You're going to remember all these small little things. And then you can also watch this video over and over to remember, the upfront mortgage fee and what that means and how it's calculated. So I love that you're asking those questions.
Right. And I'm going to put this in my home buyer. I call it the home buyer's war map for my clients. It takes you through the entire step of the home buying process. Nice. So I'm making this extra page for you guys to put all these videos on one page. So, if you're using VA, FHA financing, or conventional financing, you just click the video, you can watch it. Okay.
Beautiful.
So the next question I have for you, Amanda, is I don't think we touched this on the VA. So I'm probably going to have to cut this and put it at the end of the VA loan because I totally forgot about this, is what documentation is needed to even get started for an FHA loan or any kind of loan?
This is where my wheelhouse goes. That's a great question. So, there's a loan process inside of any home that you buy. So whether that's investment, second home, primary, doesn't matter. There's always a process to get you to the finish line. So documentation is a big thing. And why is that a big thing? Is because we always want to do the legwork up front. So once you actually do go under contract, you are literally flying to the finish line with us. So we do a lot of the heavy lifting up front. So what that means is after you've given a verbal application, we went through all of that, then I'm going to request documents from you. So I always tell people, you verbally are pre-qualified off of what you told me, but now I got to check your facts, right? So now I got to check it just to make sure everything you told us was legit. And most of the time it is, so we love our buyers. But you also have to look at what is going to be needed from you. So what we do is we try to make it as painless as possible. So what that means is I only request a small chunk of documents up front so we can review it. So that means most recent 30 days of pay stubs, most recent 2 years W-2s, most recent 2 months bank statements. And then if you have certain things, like maybe you own a home already, I'm going to ask you for those documents pertaining to that home. If you have child support, if you pay alimony, I'm going to ask you for those small little things like a child support order. That way we can get all of your income and all of your debts dialed in, and we can say, yes, you know what, John, you're qualified for $500,000. We have pre-approved everything, which means we've reviewed your income, we reviewed your assets, we reviewed your credit. And what happens on Vic's end is when he goes and writes that offer to actually the seller, they come back and they're like, oh, wow, this person is almost halfway done, which basically means we've already checked off all that stuff in the boxes, and it makes for a much stronger offer to where yours will get selected over somebody else's because you did the legwork.
And folks, ladies and gentlemen, that's the difference between being pre-qualified and being pre-approved.
Yes, big difference.
Big difference. And we also when I send your contract in, if you're buying a house, I copy Amanda, my lender, and my title rep. And it's very important that they respond to the email because the agent on the other side, the selling agent and the seller knows that we got our shit together.
Yep. And it's all about team, right? Because just like you said, if we don't have that team going into almost like battle in a good way, then everybody doesn't know what lane they're in. So that's what I love, about working with you, is that you're big on making sure the team is all solidified. And then when we go out with the client and we go out and make those pitches to the selling agent, that it gets executed because they see everybody's involved. So it's always a good touch you have.
And remember, sellers want a smooth transaction, just like you as the buyer.
Yes.
And that's our ultimate goal, is just to make it as smooth as process. But there is going to be work. And you just heard about the work, paperwork, and more paperwork.
Yeah, but right. It's all worth it. It's all worth it.
Next question. We have, okay, this is kind of like a bundled question. They're almost all the same questions, and I just need some information.
Got it.
FHA loan limits, the requirements, credit score, down payment, the lowest score, the highest score, debt to income ratio, all, you know where I'm going with that. So why don't you
I know.
Bundle that all together.
Me of a few, but.
Yeah. So bundle all that together with also where can the down payment come from if I don't have the down payment?
Okay, gotcha.
Can you do that for me?
Yep.
Perfect.
I got you. So FHA, lowest FICO as of right now is 620. It used to be 580 pre the COVID, right? And then things changed a little bit, even in the lending world. So we are hopeful that it will go back down to 580 for us. But it is at 620 for FHA. So the other thing about credit scores is that I get a lot of buyers that are on the verge, right? Maybe they're at 600, maybe they're at 599 or 619, and they just don't know how to get above that 620 mark to qualify. What we do, which is really cool, and this is for any type of loan, FHA, VA, conventional, doesn't matter what it is, we'll actually do some credit simulators for you to see exactly what you need to do to get the score you need to get. So if you're thinking about that now, like, I don't have a 620, or, oh my gosh, I don't know what to do with my credit, that's literally 80% of people, right? They just don't know what to do or what to pay off, which is normal.
Now, on that note, that's a very important, and I want to come in here because a lot of people that I talk to, they usually contact me first, and they're like, hey, well, Credit Karma tells me I'm like at 635, and we all know about Credit Karma, right? Yeah. And then some people are like, I'm going to pay off some stuff. And I always tell them, look, talk to my lender because they will tell you
Yeah.
exactly what to pay off that's going to raise your score. Because if you go waste money on something else and it doesn't raise your score, you're pretty much at
Right.
square at the same place.
Yeah.
So touch base on that because I know you just hit the nail on the head. So I want to put that out
Yep.
there.
Yep. So I'm actually going to use a client that you referred me, and no names, of course, but this actually happened to him. So he actually paid off almost 20 grand of debt, right? Because he thought that that would get his score higher. Also some misinformation in there, but he thought really that it would get it higher. So went back in, re-pulled his credit, and this is before he came to me. Re-pulled his credit, and it actually went lower. So the reason that that can happen is for a few reasons. I could spend all day on this topic, but the reason that that can happen is because we are not the professionals, and neither are you as the viewers to say you know exactly what the credit bureaus are going to rate, what cards you should pay down, what things you should do. Definitely not the subject matter experts. But we have simulators and tools, and even if you have to go, you know, as far as credit repair, we have all of that we're able to run for you to say, you know what, no, don't put $20,000 down, or excuse me, $20,000 to buy down or to pay down your credit cards. You actually only need $5,000, and this is how you do it. So the simulators are actually a tool that we can say, no, only put your balance to 1,000, because if you pay it off, your credit score is going to go lower. So these are real-time things that happen all of the time. So when I say, like, please consult us before you go and pay down the debt and do those things, I mean it with my whole heart, because I see it almost every week as far as clients coming to me after the fact, right? So this certain gentleman, he paid that down. The great thing is he got back on the saddle and realized something was wrong, reached out to Vic. He was like, you know what, let me hook you up with my lender. We got him in, and he doesn't have to pay off any debt. His credit is fine. So that is number one. You got to get with a great team to let you know that information. But number two, to avoid those heartaches and to avoid losing, you know, 10 grand for no reason, 20 grand for no reason, get with us to help you with that. It's highly important, because even myself, before I got in this industry many moons ago, I thought, oh, I'll just pay everything off. Doesn't that solve everything if you just pay it all off? And it's not true. It actually can be the negative thing, and it can make your score plummet. So great question, Vic, because I get that a lot, but that is definitely a reason to contact us. And you definitely want to make sure that, you know, when your credit score is ran, right, that you actually follow the plan. So that's another part of that. You got to follow the plan to get the score you want. You follow the plan, you get the score you want, and then you get the house, which is awesome.
Awesome. So I know we did a lot of diversion there, but
it was a good one.
That's a hot topic right there.
Yes.
I don't think we hit. So we did the FICO score. No. We did the debt. FHA requirements, the max purchase price. We did FICO score. Go through the down payment.
Got it.
What else? And where the down payment can come from.
Got it. So FHA requirements, debt to income ratio. You'll hear certain things from different entities or different lenders, but FHA is one of those things. If you're with a team that is okay with pushing the limit, I say, which is all us, as long as we have an approved loan and your debt to income maybe is high, that's okay. As long as we get that approval inside of what we call desktop underwriter. It's a back system that approves loans. As long as we're able to get that approval, you can have 56% debt to income ratio. You can have 57, you can have 52. So there's no maximum maximum as far as debt to income ratio when it comes to FHA. Conventional, again, a different beast. As far as purchase price, so loan amount right now for FHA, and this can change, and it actually does change every year. Right now it's $331,600. And so that is something that you have to be mindful of when you're purchasing. So all of my people that want a $500,000 house, unless you have a down payment that you want to put on an FHA loan to get it down to that $331,000, then FHA may not be the route for you. It may be conventional. But if you're like, you know what, I love that range of about 340, 343 would be the calculation on it as far as the sales price, then FHA may be the one for you, because you put 3.5 down, gets you down to that 331. So the minimum amount required for FHA is 3.5%. I get this question a lot. How do I know what my down payment is? And it's a very simple calculation. You take the sales price, times it by 3.5%, and that is your down payment. It's very simple. So if you're looking at homes with Vic, or you're looking at the portal, that's all you have to do to know what your down payment would be. So that is definitely a requirement, is that that's the minimum. As far as where it can come from, the great thing about FHA is it can come from a variety of sources. So gift money is a big one. It can come from mom, dad, sister, brother, uncle, cousin. That's totally fine. And then in regards to like 401k, all those types of things, sometimes people forget, right? Like myself. When I used to work back in my corporate America days, just like you, there's a 401k sitting there that I always used to put towards. I left, corporate America, completely forgot about the account, and it's been sitting there the whole time. Many of my clients do the same, right? There's 401ks that they don't realize that by the time you, let's just say, take $10,000 out on a down payment, it's actually worth it. So, and that's a whole nother topic as far as, how to get those funds out. So that's a big one. On FHA, you can get them from your checking, your savings, all that good stuff. The number one thing, and I will repeat this for everybody to stay away from, is, what is it, Vic? What's the number one thing money-wise that we always get like, where did your money come from?
Don't make big deposits. And
yes.
Don't go spend
and
money.
No mattress money, please. So what that means is that if you have $10,000 in the safe right now or underneath the mattress, you've got to talk to us. So that's a totally different story. That's something that you will have Vic and I up at midnight trying to figure out what do we do. So you definitely want to make sure it's from sourceable things. So get with us on that, but stay away from cash. Everything else in the bank account, everything else that's seasoned, everything else that's from another entity is okay.
And if you do have cash, just say like $5,000-$10,000 laying around, it's gonna have to be seasoned. You're gonna have to deposit. Yes. We're gonna have to wait. Was it 30 days or 45 days, Amanda?
60.
Oh, it's 60 now. Oh my goodness.
60, 2 months.
So keep that in mind. You have the money. You see a house that's on the market. You want to go buy it, and you don't have the down payment, but you have the cash in the safe, and you go deposit in the bank. Well, you gotta wait 60 days. That house is gone.
Yep.
All right.
So don't be afraid of it, but you have to know what you're doing. You have to know what you're getting into. And that's why we say sourceable income or sourceable ways to give you a down payment is like a gift. We know where it comes from. It's like 401k. We know where it comes from. You're checking your savings. We can see the activity. But cash is the number one thing you will find in a mortgage transaction. Just random cash on hand is the hardest thing to prove of where it came from. And that's the why behind that.
And remember, folks, every game has their rules. Basketball, baseball, football, and so is buying a house and lending money. Easiest way to put it. Okay, now, here we go. Mortgage insurance. Why is it so high? Why can't I get rid of it? What do I have to do to get rid of it? And how does it affect my payment, etc.? Just going through the whole mortgage insurance.
Okay. So we touched on a lot of those in the beginning of the video, which is good, right? So I will spare them half of those details from the beginning. But my biggest one here is the percentage, like you said, right? There's a percentage associated to it. So what that means is that, number one, again, it never falls off. It just doesn't work like that for FHA. Why you have to pay for it, not my thing to say due to the government. That's on them. It is something they charge no matter what for a federally backed loan. That's just what it is. There's stuff on Google that says what it is, but it's really opinion-based. And so I always say just watch out for that, because at the end of the day, just like a VA loan and an FHA loan, they're backed by the government. We have to play by their rules. So whenever it comes to, can I waive that or can I roll it into the loan? I get that a lot. Can't I just roll it into the loan so I don't have it in my payment? That is not allowed with FHA. You have to be able to qualify with the monthly payment for that. You have to be able to qualify. They want to make sure that you can pay your mortgage. They want to make sure that if this fee is associated, that you can genuinely pay for it with the income that you make, right? So mortgage insurance is not going away as of today. Whenever you post this, it is not going away for FHA loans. It will stay on there.
Awesome.
Does not mean you can't refinance to a conventional loan later, though. So that's the cool thing.
Yep. Always refi when you can. Okay. This is like a double back question.
Okay.
How long do I have to wait after a bankruptcy, Chapter 7, Chapter 11, to get an FHA loan, and also foreclosure and short sale?
Okay. So FHA updated their requirements, which was awesome. It used to be longer, not as long as conventional, but it used to be longer. So right now with FHA, when you look at bankruptcies, they actually put it down to 2 years. It used to be longer, but it's now down to 2 years, which is great. And again, we're going to ask questions about those bankruptcies. So what Vic and I are doing are just very broad guidelines, and then we'll dive into those because FHA gets tricky when we're doing seizing. And then if you go into, let's see, FHA, we did bankruptcy, foreclosure, short sale. All of those are 2 years from the discharge date as of now. So that got changed about close to a year ago, to where now it kind of falls in line with VA, to where it's a little bit different of a seizing requirement.
Gotcha. Perfect. So I didn't, those timelines are getting shorter. That's actually really, really good.
Yeah. Because it used to be 4 years, then it was 3 years, and literally now it's down to 2. So do I think they're going to go lower than that? Probably not, just because 2 years, 24 months is kind of where they're at. But even if, and I'll use this as a preface, even if you've had one in the last year or two, a bankruptcy, foreclosure, short sale, anything, we do have loans that are non-traditional loans. And Vic knows about those as well. They are loans to where you can have something happen like that and still get a home loan. It's just not a traditional loan. So what that means is you got to have a heavy down payment typically. So got to have some cash in the bank, got to have property that you're going to sell to get some cash in the bank. But if you absolutely want that home ownership, you can still get a loan. It's just a completely different type of loan with a different set of rules. But you do need some sweat equity and some cash to do those types of loans. And
you're not going to get those nice rates. Just keep that in mind.
No. Yeah, no, you're not. And you're not going to close in 2 weeks, which is our specialty. It's not going to happen. But you will get closed. He will find you the house and you'll get closed. So
I have 2 more questions for you, I believe. Actually, 3. What if I'm late on student loans or my income taxes? How long do I have to wait to qualify if I'm late on those student loans and income taxes?
Woo. Yeah.
So we get this. I get this question a lot. So yeah. I'll let Amanda speak on it. You might as well throw in a credit card and maybe a car payment too as well, just to kind of
Okay. Got it. So student loans are a big thing that most people have, which are totally fine. But it is a big difference between when you're getting an FHA loan versus when you're getting a conventional loan and what the requirements are for student loans. So for student loans, if you are in default, let's just say you're completely in default, you have not made a payment, they're past due. Typically my number one thing is contact the Department of Education, contact the source first, see what type of payment plan you can get on, because the federal government tracks you. So what that means is we have a little database, just like with my VA loans. We have a database that we can go in to see if you owe the federal government at any level. If you do, and it comes back as a red flag, like a default on a student loan that has not been paid, let's just say it was a foreclosure that was not addressed, right? That did not get sold properly. All those things would mean you owe the federal government still. In those cases, you've got to get on payment plans and you have to rectify the situation. So typically, whenever you're looking at student loans, a lot of student loan companies will say, you need 10 months of 9 on-time payments or 10 months of 10 on-time payments, however they figure it out, and then they're going to lift the default. So 10 months, I've seen a lot. I have seen some cases where it's 3 months, but most of the time they want to see that you've been on time before they basically remove the red flag and let you get a home. So that is the Department of Education or whoever the entity is, but it's all federally backed. IRS is a big one. So again, different rules, different ball game than conventional. IRS, they want to see that you're on a payment plan and you've made 3 payments. So 3, I say on time, but it can be within the month, 3 monthly payments that equate to basically stability, right? So they say if you've made 3 payments with FHA, we know that you're going to keep paying. We can see the receipt of the payment. Then what we would do at that point is qualify you off of that payment plan. You'd be able to move forward. But if you do owe the IRS at any point or entity and you're not on a payment plan, definitely get with your CPA or call the IRS to get on a payment plan, because typically it's not that difficult, which is great, but it is something that we do have to look out for on FHA loans.
A lot of information, but that question, I get asked that question a lot. Like, hey,
Yes.
I missed one student loan. Am I going to not get qualified? And I say, you know, let's talk to Amanda.
Yeah, and there's a different thing, right? A missed payment and default are 2 different things, right? A late payment is a late payment. Default, meaning you have not paid, it's just kind of, maybe it was default from 5 years ago, whatever the case is. That's a totally different subject. So if you're worried because you've been late on it, that may not even be an issue. It may have just dinged your credit a little bit, but it's not really an issue, right? That's why it's so important to talk to us first before you make those crucial decisions about your credit. And that way we can put you on that game plan to say, yep, you just have a little bit of things to do, or no, you actually are in default. We need you to call the Department of Education.
Okay, now let's get into the FHA Nitro tips. What did I not ask you that we can share with our viewers? I think we covered everything, but did I miss something?
Let's see. Yeah. So you did ask me about, FHA in regards to assistance, right? So in regards to the down payment of that. So I remember you asked me that. I still need to cover that. But I will say for FHA loans, occupancy and also who can be on an FHA loan, right? So many times FHA, we say, hey, you've been qualified for an FHA loan, but we may need a cosigner, right? We may need that entity. So anyone can actually be a cosigner on the loan that you trust, I would always say. Anyone can be a cosigner. It's not like another loan program like VA where you have to have your spouse only. So it is something to where if you want, let's just say your best friend, Billy Bob or somebody to be a cosigner with you, it's okay as long as you trust him, you guys will cosign on the loan. The second question I get to that is, well, what if they want to go buy a house, right? So if your cosigner wants to buy a house or do something like that, they have to qualify with both mortgages. It is not a silent cosigner where they don't have the liability. They still have the liability of the home, just like you do, but they can be a cosigner to help you qualify. The great thing about that is you can refinance them off later once you qualify by yourself, so they won't have any ties to it anymore. It's actually something that a lot of people don't talk about, and I wish they did because it's a really, really good thing when buying a home. So cosigner. Occupancy for FHA, it must be your primary. There's no such thing as an FHA loan used for an investment property or used for a second home. You can't do that. Has to be your actual place of residence. Now your cosigner, it can be their non-occupant cosigner. So it does not have to be their primary. So if you get that confused, just let us know. But for yourself, whoever is purchasing it, it has to be your primary.
Awesome. Yeah, get that question a lot. Cosigner, what do you do for the cosigner? All right, let's get into a topic. It's hard right now because of the market. Is this whole down payment assistance program?
Yes.
I have one video on YouTube that has, I think it's got like 10,000 views already. And I always get the text message like, hey, I want this Home Plus or Home in 5 program. I think it's a Home Plus program. down payment assistance. We've done a couple of those, but those are tough right now in our market. So
Mm-hmm.
give us what you got. Give us what you got.
Yes. So Vic is right. They are tough right now, but they are offered. So it is something we've closed, both FHA with assistance and FHA without. So the biggest thing is obviously people ask, can I get into a home for free, right? And where you opened up and said, we're always going to be real and honest, I'm always going to be real and honest as well, is that there's no such thing as free money. There's always something attached, right? There's somewhere that there's a catch. People don't just lend free money typically, especially when it's going to be a state-funded program. So the three main programs that we do have, Home Plus, Home and 5, and of course there's a third one that's Chenoa that a lot of people don't use anymore. But Home Plus and Home and 5 are the main ones for Arizona. Now, when we look at those programs, they are state-funded. So what that means is if the state runs out of funds, there is no assistance program, right? So that means that they're gone. So as of right now, whenever he posts this, yes, they're here. So the biggest thing with that is that, yes, there are assistance programs to basically say, yes, we will pay for your down payment. So in the beginning where I was talking, 3.5 times the sales price, they will pay for that 3.5. The down payment assistance range can range from 3.5 to 5% typically inside of that window as far as what they're willing to pay. So 3.5%, let's just use it, standard FHA down payment assistance. A few things that are a few catches. Number one, you actually have to live in the home for 3 years without refinancing or selling. Technically, you can still refinance or sell, but you owe the money back. So what that means is when you go to sell with Vic, he's going to say, hey, don't forget you have a $9,000 DPA that we have to tack on to the equity, the net equity of proceeds that you're going to get back, right? Same thing with a refinance. If we go into refinance and we see that you have assistance, you have to pay off that loan first, right, through the refinance. So just remember, if you're not planning on staying there, maybe it's just a year for you and you're going to go on to a different state for a different job, down payment assistance may not be right for you. But if you're like, hey, you know what, no, 3 years is fine, I don't really care, then it becomes forgivable after that 3 years. So no, you don't have to pay back that type of assistance. There are certain ways and certain things we can do to have you pay that money back, and you would get a lower interest rate. But typically the main program that people use is not having to pay it back and staying in that forgivable loan. Other thing is down payment assistance has very tight requirements on debt to income, especially post-COVID. Some of them have changed. So depending on the program will depend on your FICO as well, what you actually qualify for. So down payment assistance, 640 is your minimum. So you have to be at 640 at least to be able to even run for an approval for those programs. Now, even if you're at a 640, that doesn't mean you're automatically in. It just means you're able to get approved. So at that level, then we say, okay, what does their debt to income need to be? So it can range anywhere between 45 to 50% for FHA. However, if you're under 680 FICO right now, you have to be at 45% debt to income. So I know I'm getting kind of technical on this, but I want everybody to really, really understand when using assistance programs, what the true requirements are. Just like you and me, Vic, we're on social media, we're on YouTube, we do all these things and we see, oh my gosh, zero down, zero everything, and green lights shining and all that. Yes, it's awesome. It's good to be able to have it there if you need it. Just know I want you to be fully well-rounded in the knowledge about it, because it may not be right for you and it may be right for you. So that's the part we got to figure out.
Right. I always see that all the time. Like, hey, I don't need no money to buy a house. And I say, yes, I do. You need at least $500 for earnest money up cash.
Yes.
You need about $550 for your home inspection and termite. So right there, you need $1,000. And then you also need the appraisal, which is another $550. So up front, you most definitely need at least $2,000 worth of your own cash to get started. Down payment assistance is good. You just got to rewind this and get those topics that Amanda hit, the hit list. And right now, the rates are almost pretty good, right? With down payment assistance and FHA.
That's the one great thing right now. We just closed one of our clients. He got a 3.125 on a down payment assistance program. And I had to triple check myself because I'm like, no, this cannot be right. And Vic and I were on the phone and he's like, is this right on the closing disclosure? I'm like, yeah, it's right. So now again, he didn't get that for free, right? So there's some things that you can do with down payment assistance where the assistance program only pays for, let's say, 3% and you pay for 0.5%. Then you're able to get a lower rate. So there's some things we can do in there if that interests you. But yeah, it was literally down payment assistance on an FHA loan at 3.125. And then the rates actually range all the way. The highest rate we have is about a 4.5. Now, again, like I said before, there is down payment assistance, and then there's almost like you look at them as branches, all different ways to qualify for assistance and different options inside of those programs, right? So this is one of the options that the client chose to take advantage of, and he only paid, I think it was $1,300 to $1,400 at closing for the rest of his down payment, and he got a 3.125 locked in.
And the only thing I want to tell you guys out there for my viewers is don't tell us that you don't have any money.
Yeah.
The facts are going to show that you have some cash. And if you have some cash and you're upfront with it, Amanda can tell you like, hey, look, if you got $1,200, instead of being at 4.125%, you can get into a down payment assistance at 3.125%. You know how much that saves you over the life of the loan if you're going to stay there for a long time.
Yeah.
The second thing I want to say is you want to use a lender who has a lot of programs because you want all the options. You want down payment assistance, FHA, conventional financing. That way you can pick and choose and which one's going to be right for you. Because that's all we're doing here is providing information. But when it gets down to the facts on the documents, Amanda can say like, hey, look at this program over here or look at this program. You have these two options. And that's what I love about her.
Yep.
Okay, I think that's it for FHA. Let me double check. Is there anything else you want to share, Amanda? Oh, how fast are you closing FHA loans and down payment assistance? Because time frame is a key for our clients, right? They're coming from a lease, an apartment. They're either selling a house and rebuying a house. So what's the fastest you can close, and how slow can you pump the brakes and just say like, hey, we need a little bit more time?
Good question. So every client, every property is different, right? Normally. However, whenever you look at how fast we can close, I always say it's up to the buyer too, because how fast you get me documents, how motivated you are is how fast I can move, right? So if you're able to do the process like we talked about, turn in documents, let us review those, let us get you numbers, go out house shopping, and you're that type of client where you're like, nope, let's go, we got this, then we're the team for you because we can move at that type of speed, right? So we can definitely close in as soon as 10 days. With the market that it is right now, I always like to tell people, if you are going to put that type of time frame, just know that there is an appraisal in the process that has to happen, right, Vic? So what that means is there's third parties outside of me that I have to wait on for certain things. When that happens, that means that there's some things that are actually out of Amanda's control. You know how I don't like that, but it happens. So really right now in the time frame that we're in, when you're listening to this, in July of 2020, right now, typically you're seeing anywhere from about 2.5 to 3 weeks being a really good sweet spot to close on a home. And that is quick because I will tell you my competitors and people that I know and friends in the industry, they're at about 45 to 60 days, which is crazy right now. Now, the great thing is because Vic and I work closely together, that is another negotiating tool that he takes to get your offer accepted. Hey, they're pre-qualified with my lender. She can close in this amount of time frame. Guess what? That puts your offer from here to here because now the seller will get their money quicker. Right? That is what the seller wants. They want to be able to get that sold and to be able to be done with it quick. Normal time frame, of course, is 30 days for any type of contract, right? A staple is 30 days, but we are always closing in less than 30 days unless you as the buyer or the seller request a longer close. Vic and I have had deals where I'm like, can we get this done in 2.5 weeks? And he's like, no, Amanda, we got to wait a month and a half. I'm like, So it happens, but I am someone who I definitely love to close sooner to get you into your home sooner. So.
Yeah. And touching base on that third party, remember, you still got to do the home inspection. So if you want to move fast, we got to move quick on a home inspection. That means that we either have during the home inspection period, and then we got to order the appraisal once the offer is accepted, right?
Yep.
So if you want to move fast, we can move fast. It's just that we're going to ask you the question like, hey, how fast do you want to move here? Another good thing, I love working with Amanda. She always sends an email. Your documents are under review, and we will get back to you 48 to 72 hours.
You already know what it says.
I get some good feedback and some bad feedback, and they're like, I need to know what's going on. I need to go. And I tell them like, wait, I said, she's doing everything to make sure you're going to get qualified and get the home for the best loan program. And I said, it's not going to be fast. If you want fast, we're going to miss some stuff. You're going to hate it. And we don't want that to happen.
Yep.
So explain your little email. Explain your little email, because some of my clients are like, hey, Amanda, is like, it's gonna take her this long. I'm like, you gotta just be patient here. It's like, we're doing it. So
my little email.
Explain your email like, your documents are under review and we will get back to you within 48 to 72 hours.
So, and that's literally what it says. So I'm glad you brought up my little email. So there's a lot of reasons I do that. Number one thing that I hear and complaint I hear when people buy a home is communication. Communication. My loan officer won't answer the phone. My loan officer doesn't know what they're talking about. It's been like 3 weeks and I'm still in processing. What the heck does that even mean? Nobody on the team can tell me where my file's at. And it's just the nightmares I hear, right? Great thing just about you and about us is course correction, right? So what that means is when I know there needs to be an email in place, right? When I know that there needs to be some time associated with things, I will put that in place. So that email, once you give me documents, right? Once you say, Amanda, here's my documents, go ahead and do your magic. When you do that, you have to allow us to do the magic, right? So that means I have to check your income, which means I'm relying on a third party, which is your employer, to get back with me. That is usually the longest part of my 48 to 72 hours is I got to get that verification back. And even after 72 hours, we half the time don't have it back because sometimes your employer doesn't move as quickly as we move, right? The other thing, exactly what you said, there's nothing worse than missing something on a loan, going house shopping, going under contract, and then all of a sudden in contract, we're like, oops, we missed something. And we missed it because we were rushing. We missed it because we didn't send that little email that said, let us do our job for 72 hours so we can help you later on. It is actually a safe proof that I've put in because I want to protect the client and I also want to protect our side of it, right? Because just like you, Vic, I have a full team here, which means I need everybody focused on their job and what they're doing for the client. I need to be focused on your application. In order for me to do that, I've got to make sure I have all the different pieces of information to be able to say, okay, we got a solid pre-approval. Those same clients that are like, oh man, it's going to take her that. Once we go under contract, they're like, whoa, Amanda, slow down. I'm like, oh, no, you got to get, let's go, right? So yeah, it's funny. I love them. It's good.
Yeah, I get that. As like, why is it taking so long? I said, just be patient. That's it. It's the process. Okay, trust the process.
Yeah.
Okay.
And then when they get under contract, they're like, whoa, Amanda, what's going on? I'm like, I thought you wanted to speed it up. Like, let's go. We got this. Like,
you give a little, you take a little, you give a little.
Yeah.
So.
Yep. And then they get keys and it's all worth it, right? They forget about the 72 hours that they had to wait for documents. So.
And we have a requirement if you work with us. Let me rephrase that. We have a requirement when you work with us, you have to do us a little video. It's in my home buyer war map. It takes you step to step. And on my third video, it asks like, When we get to the finish line, if we did a wonderful job for you, we have to shoot a video. So, or at least a picture. But please.
Yeah, at least a picture.
At least a Google review. I mean, come on. At least a Google review. You could just type something up for us. I appreciate it.
Please.
But anyways, I think that wraps up today's show. Everything about FHA loans, including down payment assistance, a little bit about little email chatter that you'll get from Amanda. So with that,
and that is one email out of how much, Vic? It's like a multiple email stream history. What about the ones that say, congratulations, you're pre-approved? And they're like, ah! So that one email you chose to pick out. I like how you did that.
The reason why is because I have to explain it. I have to explain it to my clients.
So many times, yeah.
So now we have it on video format. So I can be like, hey, just go to minute 22.05. Okay, with that being said, I hope you enjoyed today's video. Once again, I am Victor Huerta, a local real estate agent here in Phoenix, Arizona. We have Amanda Melendez as well, my preferred lender. I'll put all of her information below in the description. And if you have not done so, click that subscribe button and that bell to get notified once we drop the latest video. I mean, we're just bringing some home buyer content, home seller tips, the Phoenix real estate market updates. So you can be mindful when you're thinking about buying, selling, or investing in some real estate. We will see you on the next video. If you have any questions, email me at victor@freeagentproperties.com. Again, that email address is victor@freeagentproperties.com, where we release new videos each week on home buyer tips, home seller tips, the Phoenix housing market updates, so you can be mindful when you're thinking about buying, selling, or investing in real estate. We will talk to you soon.